Hello, everyone, and happy Thursday. I'm Tiffany with GROW Nebraska, and I just wanted to take a chance to welcome you all to this Thursday's webinar with Elizabeth Yearwood. I will let her take it away as we talk about financing your business in just a minute. But in the meantime, I just had a couple of announcements and housekeeping items. I just wanted to give a shout out to our featured sponsor for this month, which is BW Telecom. They are headquartered in Breakeven, Nebraska, and they've been a GROW Nebraska member since 2012. We are so grateful for their support. It's because of them and other sponsors that we are able to provide things like this for free. So thanks again to them. Also wanted to give a shout out to our featured member, Marathon Press. They have been a member with us since 2020, and they are located in Norfolk, Nebraska. If you would like to be a member, you can learn more about that at grownebraska.org/join. So shout out to them. We do some printing with them. They are an awesome business. So if you ever need some printing done, definitely go check them out, check out their services. I also wanted to say that if you want to grow your business more, if you are looking to learn more about marketing and other topics that we tend to cover in these free monthly webinars, you should consider attending our Marketech conference this summer. It's in July, on July 15th this year, and this year's theme is all about making the digital pivot. So we are bringing in more digital marketing experts to help you make that transition, and even if you already have started that transition or feel like you have fully made it, you should still consider attending, because we're also going to be talking about how to make sure you are getting ROI on all of your digital marketing initiatives. So our keynote speaker, David McBee, is going to be covering making the digital pivot and internet marketing ROI. So he is just an amazing expert on that topic. Super excited to hear from him and super excited to hear from all of our other experts. So sign up for that July 15th conference. If you sign up by June 15th, you can actually secure a better rate. We'll have our early bird rates active through that day. So sign up now, make sure you secure that rate. I look forward to seeing you there. So now it's time to hand off the microphone to Elizabeth. Now, just before I do that, as that presentation is going, and if you have a question, feel free to put that into the chat, and we will have a time to answer questions at the very end. So if a question pops into your head, don't be afraid to put that in the chat. Don't be afraid that if you ask a question in the middle and then it gets answered, that you'll look silly. Please don't worry. I would love to see lots of activity happening in the chat. So ask as many questions as you want, or if you have questions at the very end, try to get those in right away so that we have time to answer them. So I will let her take it away. Thank you so much for tuning in today.
Hi, everyone. This is Elizabeth Yearwood with the Small Business Administration's Nebraska District Office. Thanks to everyone for joining us today. One of the most important steps to starting your small business is obtaining financing. We're going to discuss today what criteria lenders use to determine loan eligibility and what your options are if you can't receive a traditional bank loan. Sometimes it can be difficult to obtain traditional financing for a variety of reasons. Banks are risk averse, so they may feel that it's too risky to loan money to a new entrepreneur. Or maybe your credit score isn't the best. Or maybe you don't own assets for collateral, or you don't have enough to put down a large down payment. There's lots of reasons why a potential borrower may be turned down for a traditional loan, so we're also going to discuss some alternative financing options. Before we get started though, I always like to promote our office Twitter account. Following us is a great way to stay informed on events, get useful business information, and get links to expert blog posts and all kinds of great information. You can follow us at SBA_Nebraska. Let's start with who we are and what we do. The SBA is the only federal agency that's solely dedicated to helping small business owners start, grow, expand, and recover their small businesses. We have guaranteed loan programs that help small business owners get access to capital. We have a disaster loan program that provides long-term, low-interest loans to individuals and businesses in federally declared disaster areas. The SBA also has several government contracting certifications that help small business owners be competitive for contracts. We also provide free technical assistance, entrepreneurial education, and business mentoring through our resource partners. Before you seek out any business loan, there are some things you need to do before you go to the bank. One of the most important things to do is that you have a complete and polished business plan. You'll want to have a solid financial section that includes your startup expenses like payroll costs, purchasing inventory, rent or mortgage, and setting up utilities. You'll also want to include operating expenses and forecasted income for the first 3 years. You could also put information about your break-even analysis, and you'll definitely want to include how you're planning on using the loan proceeds. It can be hard to put together these types of forecasts, so you can utilize our resource partners for free assistance. Another very important step to take when you're seeking financing is to make sure your personal financials are in order. If you're heavily in debt, have a low credit score, or have defaulted on loans in the past, this might make it very hard for you to get financing for your business, and you may need to build your credit score back up or pay down some debt before you start your own business. Speaking of knowing your credit score, you should know what it is before you go to seek a loan. You don't want any surprises when your lender pulls your credit report. You can check your report for free at annualcreditreport.com. Usually you can get one copy of each credit bureau's report per year, but because of the fraud that's running rampant from COVID-19, you're now allowed to check for free on a weekly basis. Some of you might already know this information, but because it's a critical component to your business plan and therefore important to financing, we're going to cover costs super quickly. There are 2 kinds of costs that you identify in your financials: fixed costs and variable costs. Fixed costs are expenses that you have no matter how many sales you generate each month. These are expenses like rent, flat rate utilities, salaries, loan, and other fixed debt payments. Variable costs are going to be associated with your sales numbers. These are costs like replenishing your supplies and raw materials, postage, utilities that vary by use, and any non-salaried worker hours that might vary from week to week. I also want to quickly cover your break-even point as well. Put simply, this is the amount of sales you need to make in order to cover all of your expenses without making a profit. You need to know how many sales it will take to reach this point and how many sales it would take for you to start making a take-home profit as the owner. Let's look quickly at debt versus equity. There's probably no surprises on this slide. Going into debt keeps you in complete control of your business, but you're receiving money that you'll have to pay back with interest. With equity, you're receiving funds, but you're giving up some control in the business. Often with investors, there might be benefits beyond just the money. Some of them will take a personal interest in growing the business and help you in a mentoring capacity as well. Before we get into specific financing options, let's take a quick look at this slide, because regardless of what kind of loan you're looking for, lenders are going to want to see all of these things with you. We've already mentioned your business plan. This is the document that tells the lender all about your business and how you plan to use the funding. Lenders will also want collateral. This is typically in the form of real estate. It could be the business that you're buying, your home, any additional properties that you own, and in some cases, heavy equipment. Lenders will typically want the loan to be fully collateralized, whereas the SBA will take all available collateral for their guaranteed loan programs. You will also have to put a down payment down against the loan. This is to demonstrate to the lender that you have skin in the game and are serious about starting your small business. Banks might require anywhere from 20 to 40% down, and the SBA typically requires 10 to 20% down. You'll want to have a decent credit score in order to secure a bank loan. The SBA is more lenient on credit scores, but it will always be a factor, even in getting microloans, which we'll explain shortly. You'll also need to show 1 to 3 years of financial projections for your business. These will be your forecasted income and expenses, your break-even and profit points, and other documents like that. You'll also need to provide your personal tax returns as well as basic personal and business info. These are your basic sources of financing that we're going to touch on briefly. Notice what you don't see on this list: small business grants. This is because grants for small business startups are kind of like unicorns. We've all heard of them, but we've probably never seen one in real life. The SBA does not offer grants for startup businesses. You might be able to find something through your local Chamber of Commerce or possibly through a national business pitch competition sponsored by a large company or something along those lines. But generally speaking, it's difficult, if not impossible, to find a grant to start a small business. Whether you're seeking SBA financing or a traditional bank loan, the process is going to involve the 5 C's: credit, collateral, commitment, character, and cash flow. We've already covered credit, collateral, and commitment, so let's take a look at these last 2. Character is simply your background. Do you have a criminal background? Are you currently on parole? Have you ever defaulted on loans before or filed for bankruptcy? Do you owe back taxes or child support? All of these things can be factors in whether or not you can successfully obtain a loan. Lastly, banks are most interested in cash flow. This is simply your ability to repay the business loan each month. You'll demonstrate this in the financial section of your business plan. Sometimes it can be difficult for first-time business owners to obtain traditional bank loans. This could be for a variety of reasons. If the business owner has a poor credit score or carries a lot of debt already, this could make a bank hesitant to lend money. The business owner may be brand new to business ownership, or it might be in an industry that's perceived as being risky, such as a restaurant or a bar. A business owner might not have much collateral or a lot to put down as a down payment, or the business plan might just not demonstrate adequate cash flow. Lastly, the business owner may not provide all of the information that the bank requires. So how can a business owner who can't qualify for a traditional bank loan be able to get financing? That's where the SBA comes in. One of the most important resources that the SBA offers are our guaranteed loan programs. Our regular guaranteed loan programs are done through financial institutions and not direct from the SBA. The SBA guarantees between 50 and 90% of the loan, meaning that if you were to default on the loan, the SBA would pay the bank back the guaranteed amount. This makes banks more likely to lend to business owners who don't qualify for traditional financing because the loan is far less risky. Loans go up to $5 million and can be used for any legitimate business purpose. This includes buying a business, purchasing real estate, doing new construction, working capital, buying inventory, buying equipment, and other such things. There are benefits to the borrower as well. SBA caps the interest rate that the banks can use, and there are no demand features on SBA loans. This means that the loan can never be called in early. SBA loans also have lower down payments and require less collateral than traditional financing. Because SBA guaranteed loans are done through the bank, you do not need to visit your local SBA district office. You'll apply for the SBA loan directly through your local lender. We suggest that you first work with one of our resource partners to make sure your business plan is good to go before you start approaching lenders or investors. Any bank or lending institution in the U.S. or U.S. holdings can do an SBA loan. The lender will decide whether to use a traditional loan product or to pursue an SBA loan, and if so, which loan program to use. The lender will then contact the SBA and work with us. All of your dealings will be only through the lender. If the lender feels you aren't a viable candidate for either a traditional bank loan or an SBA guaranteed loan, then we suggest you try another lender or try for a microloan, which we'll cover in a minute. These loan programs are federally backed, which means you can't use them for just any business purpose. There are a few things that cannot be financed by an SBA loan. This includes casinos, speculative businesses like flipping homes, and businesses that aren't, let's say, family-friendly, to name a few. The SBA loan programs are also for-profit businesses only. Religious organizations, nonprofits, and charities are not eligible. Obviously, you can't use a federal loan program for anything illegal or if you've defaulted on a previous federal loan. Our primary program is the 7A loan, which goes up to $5 million and can be used for most small business financing needs. If you borrow up to $150,000, there is an 85% guarantee. This means if you were to default on the loan, the SBA would pay the bank back 85% of the loan. If you borrow over $150,000, the guarantee goes down to 75%. The term is up to 25 years for real estate or construction projects and up to 10 years for any other type. There will be a guarantee fee of 2 to 3.5% of the guaranteed portion of the loan, but this can be rolled into the loan. The SBA's other flagship loan program is the 504 loan. This loan is used for new construction, real estate, renovation, and fixed assets. This is a unique program because multiple entities are involved. The SBA covers a portion of the loan up to 40%, the bank covers 40 to 50% of the loan, and the borrower puts down 10 to 20%. This program does have a general requirement that one job be created or retained per every $65,000 that is borrowed. This loan can go up to $5 million. The SBA also has a streamlined loan program that is an easier application process. The SBA Express Loan is done through designated lenders who use their own forms and processes for the loan. This program normally goes up to $500,000, but the limit was raised to $1 million in response to COVID-19. The $1 million remains in effect through the end of the fiscal year, so the end of September. This loan can be used for most business purposes and can also be in the form of a revolving line of credit for up to 7 years. The guarantee for this program is 50%. We're excited to announce that the guarantee fee on this loan program has now been permanently waived for veterans. The SBA also has short-term loan programs and lines of credit that are particularly designed for working capital needs. These loans fall under our cap lines programs, and they go up to $5 million and follow the same guidelines as the 7A loan program. These are useful for seasonal businesses and construction companies. A benefit to this program is that you can use a signed purchase order or contract as collateral against the loan. The SBA has rolled out a quick and easy method of getting in communication with SBA lenders. We designed a platform called Lender Match to help you find lenders. It's a free online referral tool that connects you with interested lenders. Simply go to the site, answer some brief questions about your business, and your information will be sent to participating lenders who will then contact you within a couple of days if they feel you're a good fit for one of their loan products. As I mentioned before, sometimes it can be tricky for startup businesses to get capital, and sometimes entrepreneurs do get turned down for traditional bank loans and for SBA guaranteed loans. In these cases, we suggest borrowers talk to one of our partners about a microloan. The SBA provides funds for designated local, community-based nonprofits to be able to offer small business loans for startups and existing businesses up to $50,000. We work with these lenders in the state of Nebraska, and there's 3, the Nebraska Enterprise Fund, the Rural Enterprise Assistance Project, and Community Development Resources. The Nebraska Enterprise Fund has offices both in Oakland and Omaha and can do SBA loans up to $50,000. They can also do microloans from $1,000 to $150,000 using their own funds. Nebraska Enterprise Fund also offers free one-on-one coaching, mentoring, business plan assistance, and help with cash flow and finance planning and marketing support. These services are all free of charge. The Nebraska Enterprise Fund also has a wide variety of free and low-cost workshops and webinars. Microlenders are a great option for borrowers who don't have a lot of assets for collateral or whose credit scores might be a little bit lower. The Rural Enterprise Assistance Project provides microloans and technical assistance to businesses in rural Nebraska and in Lincoln. They have several loan programs available, including SBA Microloans. You can also apply on their website for loans of up to $20,000. Our third microlending partner is Community Development Resources. In addition to SBA Microloans, they also provide loans up to $100,000 and are a designated SBA 504 lender and can do loans from $100 to $5 million under that program. They are located in Lincoln and also cover the whole state of Nebraska. As I mentioned early on, the SBA does not provide grants to small businesses for startup purposes. It's very difficult to find grant money to start a small business. However, the SBA does provide grant money to organizations that support small businesses with technical assistance, exporting, and innovation. The SBA provides grant funding for the Small Business Innovation Research and Small Technology Transfer R&D programs. These programs get small businesses connected with funding for federal research and development for products and services that have high commercialization potential. Your best source of information on these programs is the Nebraska Business Development Center, and they can provide free assistance to those folks that are interested in pursuing those funding opportunities. The SBA also provides funding to state governments to assist small businesses with exporting operations. The Nebraska Department of Economic Development has repeatedly received the State Trade Expansion Program grant from the SBA. Business owners interested in exporting operations should contact the Department of Economic Development. Lastly, the SBA provides funding in the form of a Growth Accelerator Award. This is given to local innovative and promising small business accelerators. The 2019 recipient was Invest in Nebraska. Another option for funding is to seek angel investing. Angel investors are community members who support economic development and help build the entrepreneurial community. With angel investing, you're seeking funds in exchange for a percentage of ownership in the business. There's various pros and cons to this. You can get startup funding that you don't have to pay back. You can often have flexible agreement terms, and angels will often mentor you and take an active role in your business. On the more negative side, though, you're giving up a percentage of ownership in your business, so you're no longer the 100% owner. Angels may not make follow-up investments, and if they choose to take a percentage of your profits, it could prove to be costly. Angels also may expect a fast and high return on their investments, and they may want to be directly involved in your decision-making process. Another form of financing that's getting increasingly popular is crowdfunding. Crowdfunding is simple. It's soliciting people to share their resources with you, usually through the internet. There's two types of crowdfunding. You could be seeking monetary donations, which usually require some sort of gift in exchange for the donation. This could be something like anyone who donates $50 or more would receive a free t-shirt with your business logo. Or you might be offering equity. This means that you would be exchanging shares in your company for funding. There's a wide variety of crowdfunding platforms out there. Listed on the slide are just a few. For those of you that aren't familiar with crowdfunding, the concept is simple. You're creating an online platform that showcases whatever business or endeavor you're trying to raise money for. You set a threshold that you want to receive. For instance, maybe you're looking for $50,000 in 3 months. You drive people to your site and you hope that they donate. If you don't raise all $50,000 within your time frame, you don't receive any money because no one's donations are collected. If you meet or exceed your threshold, you'll receive whatever that amount is less some financing fees. There's many pros and cons to crowdfunding. It can be easier to obtain funding for non-traditional ventures, and you're generating a lot of PR about your business. And you can get the financing relatively quickly. On the other hand, crowdfunding is all or nothing, so you might not receive anything at all. The funding platform will also likely charge both a funding fee and a processing fee, which is usually a percentage of the amount that you receive. You'll also incur costs from the gifts that you're sending in return for your donations. I'd like to end today's presentation by just making you aware of SBA's partner resources. These organizations offer free business assistance, consulting, and educational opportunities. We always suggest that folks start with SCORE. SCORE is an official resource partner of the U.S. Small Business Administration, and they've helped more than 11 million entrepreneurs through mentoring, workshops, and educational resources since the 1960s. SCORE also has a nationwide network of volunteers who mentor small business owners on a wide variety of business topics. They can help you write your business plan, sit down with you one-on-one for business consulting sessions, and they can even help guide you in the process of business startup or expansion. All of their services are free of charge. Nebraska has SCORE chapters in Omaha, Lincoln, Columbus, Grand Island, and Scottsbluff. You can visit their website to find the location closest to you. They also have a wealth of online resources, including templates, articles, blog posts, online courses, and free and recorded webinars. You can also go to their website for information on getting remote mentoring. The Nebraska Business Development Center is also an official resource partner of the SBA. The Nebraska Business Development Center has offices throughout the state and provide basic business services free of charge. These services include market research, helping you with your business plan, providing general business consulting, helping you get your small business into exporting, and more. They can assist you at any point during the life cycle of your small business. NBDC also has additional services available like business valuation, advanced education classes, exit planning, and that type of thing for which they do charge a fee. We've already mentioned the Rural Enterprise Assistance Center, but they do more than just microloans. They also have a women's business center, a Latino business center, and provide free business assistance and free business counseling. They also do a lot of free and low-cost workshops. REAP is unique in that it has an office without walls concept. Because their area of coverage for business assistance is so vast, they cover all of Nebraska outside of Omaha. They hire a number of contractors and have employees located throughout the state that can meet with you in your hometown or at your place of business. I want to spend just a few minutes talking about our disaster loan program. For those of you that are already in business, if you have suffered economic losses due to COVID-19, you should consider applying for SBA's Economic Injury Disaster Loan. It's a 30-year, 3.75% interest loan that can be used for working capital. This includes payroll, fixed debt, rent, utilities, and other such expenses. Please note that this loan cannot be used to refinance existing debt or to make improvements to your business. The application deadline is December 31st of 2021. And you must have been operating prior to January 31st of 2020 to be eligible to apply for a COVID-19 EIDL program. This first payment is deferred for 2 years after receiving funding, but interest will still be accruing. This brings us to the end of our presentation today. Thank you so much for joining. If you have any questions about anything we've covered or would like more information, please feel free to reach out to me. You can email me at elizabeth.yearwood@sba.gov or call me at 402-221-7200. Thanks.
All right. Thank you so much, Elizabeth, for putting together that presentation. If you want to click the button that says go on stage and hop on live with me real quick, that would be great. I see a question pop up in the chat here that I think it'd be great if we could answer. Carlos asked, does the EIDL work retroactively? I.e. someone who was laid off during COVID applying for this loan to start a new business?
Yeah, so that's a great question. Can you hear me okay?
Yep, I can hear you.
Oh, perfectly. Perfect. Okay. So that's not really how the EIDL program works. EIDL is for folks that were already in business. So it's not for how would you put that, kind of regular citizens, right? At least not for COVID. This is specifically, the COVID EIDL-19 is specifically for business owners that were in business during the affected time, so 2020, and it wouldn't be used to be able to start a new business, even though you were laid off, which that's unfortunate, but you would not be eligible for that program.
Okay, good to know. Let's see, I just wanted to open it up here. Just wait a minute just in case anybody else had any questions. But also, if you did have questions and you didn't get the chance to ask them, or maybe it was a more personal question that you want to ask about a specific situation, feel free to reach out to Elizabeth. Her contact info was thrown up there on the screen at the end of her presentation. Or if you missed that, feel free to send me an email or give me a call or something. My contact info is up on the screen. I can connect the two of you, make sure that you get the help you need, that you get the questions answered that you have. More than happy to be the middleman there. So feel free to reach out there. Also, if you have any questions about GROW Nebraska, feel free to reach out to me as well. I would love to tell you a little bit more about our organization. And I'd also love to just connect you with some more of our training resources. We have more trainings coming up next month. Those are going to be focused around Amazon and doing online customer service. So we'll have 2 next month, and I'm super excited for both of those. So if you want to sign up for those, you can. Sign up for online customer service is live on our site right now at grownebraska.org. It's under the training tab, and I will be putting up the one about Amazon here pretty shortly, just once I get a few things settled with that trainer. So really excited for those opportunities. And also remember, sign up for Marketech if you are interested in attending that. So thank you again to Elizabeth for putting together such a great presentation, a very thorough, very good overview of all of the different options that are out there. So again, if you have any questions, oh, there we go. Well, we've got one more. Let's answer that before we get going here. Carlos then asked, what is the recommended approach for getting a loan when there's uncertainty about financial projections? Namely, have to start the business in order to start funding clients, unsure how many or quickly they'll sign up for services. So this is more of a question about getting funding for a startup.
Mm-hmm. Yeah, that's actually a great question. And that's probably one of the most difficult parts of doing your business plan, because especially if you've never been in business before, you really have no idea how many clients you're going to get or those types of things. So that's a great question. That's really hard to do. And that's really where we suggest that you sit down with our resource partners, because they're experienced in helping you put together basically educated guesses kind of based on your market research plan and the demographics that you're targeting and those types of things. So definitely reach out to SBOR, the Nebraska Business Development Center, or the Rural Enterprise Assistance Project folks. They can all help you with that. And again, that would be all free of charge to you.
Yeah, SCORE and REAP and all of those organizations are really great. We also do some work with them. So great people to work with, great opportunities there. So thanks for sharing that, Elizabeth. I don't see any more questions right now, but again, if you want, feel free to reach out if you have any other questions. So thanks so much for tuning in today. I will see you guys again, hopefully soon.